Hi, this is Mike Larson with a special edition of Money and Markets TV. Last Thursday, Federal Reserve Chairman Ben Bernanke went before the Senate Banking Committee to answer questions on bank regulation and financial stability. A couple weeks before that, he also went before a collegial group of reporters to defend his decision to leave his ultra-accommodative monetary policy unchanged. But if I could talk to Bernanke, I'd ask him one simple question. What the heck do you think you're doing? Because right now, he's giving us the worst of all worlds, slowing growth and higher inflation. He's also bucking the trend of virtually every prudent central banker in the world and destroying our hard-earned wealth in the process. If Bernanke were sitting across from me right now, I'd make him take another look at the recent economic data, like the 0.5% rise in April retail sales, the smallest gain since last July. And I'd point out that much of that increase was due to the higher price of gasoline and food, rather than strong demand for goods overall. Then I'd note that initial jobless claims fell less than expected last week, while the 4-week moving average of claims hit its highest level since November. That means that April's 9% unemployment rate is all but certain to climb this month. At the same time, I'd ask Bernanke just what he proposes to do about inflation. Inflation that he continues to deny even exists. Wholesale prices surged 0.8% between March and April, much more than expected. And they jumped 6.8% from a year ago, the biggest annual rise in more than 2.5 years. Consumer prices aren't much better either. They surged 3.2% from a year ago, the biggest increase since October of 2008. And we all know that those official numbers fail to reflect the severity of the inflation that we're seeing in our daily lives. In response, central banks everywhere are taking steps to curb inflation. China just raised bank reserve requirements by another 0.5 percentage point, which was the 5th such increase this year. And Norway just became the latest country to hike its benchmark interest rate, following Sweden, the Philippines, Malaysia, India, and the European Central Bank. Yet Bernanke and his buddies are still sitting there on their hands. Oh, and what about that housing recovery? Remember the one that all those trillions of dollars in freshly printed money and government aid were supposed to stir? Well, the very latest figures show home prices falling to within a whisker of multi-year lows. Meanwhile, 3.7 million mortgages are 90 days or more delinquent. And the system is so overwhelmed with foreclosures that it now takes an average of 400 days to process them. Now, unfortunately, I can't ask Bernanke these questions face to face. But based on his public comments, it's pretty obvious how he'd respond anyway. He'd say he's doing a darn fine job. He'd say quantitative easing has helped all of us. And he'd say the only thing to do is stay the course. So look, it's clear that we can't count on Bernanke to pull us out of this mess. Plus, with our $14.3 trillion debt load bumping against the ceiling, we can't count on legislators or the White House either. The only thing we can do is take steps to protect ourselves, or even profit from the financial and economic crisis. I'm Mike Larson for Money and Markets TV. Thanks for watching.